Well, India's economy expanded at the weakest pace last quarter since the 2009 global recession. That has elevated inflation and subdued investment continues to add pressure. Joining us to look at India's economy, Ronak Gabalders, country chief risk analyst at Rand Merchant Bank, and Nikhil Hira, partner at Deloitte East Africa, joining the conversation from our Nairobi studios, and of course adding his view on India's appetite for investing in East Africa and Africa more generally. Thank you so much for joining us, Ronak. So you've just been in India, and of course the big issue right now is the reforms they've put in place. And I just saw yesterday Parliament adjourned. They weren't able to reach an agreement on opening up the supermarket sector to foreign investors. This is a key issue right now. The opposition party is very opposed to it. And of course, we know it's a democracy. Everyone has a say, and they aren't able to find common ground on where to from here. What are your thoughts on the reforms right now?
The return of Finance Minister Chidambaram to the Finance Ministry in September was meant to herald a new era for India, a push towards the reform agenda in multi-brand retail, aviation, broadcasting, and open up those sectors. That was some of the boldest political decisions we've seen in India for 8 years, but that was basically the initial battle being won rather than the war. Since then, a key coalition partner, the TMC, Congress has left the coalition, and investors and ratings agencies are going to be looking at event risk to see how much gets done on the reform agenda in the winter session of Parliament, as well as the budget in March.
And of course, the big issue is whether they are going to have a downgrade, which would mean that their grade is jug status, and that, of course, would be a blow, I'm sure, to India right now. What are your thoughts on whether this is likely to happen? Because that's, of course, what S&P is threatening right now.
Absolutely. So, like I said, event risk is the key thing to watch over here. Investors and rating agencies will be watching the extent of the reform agenda, how much gets done in terms of game-changing legislation like the National Investment Bill, Goods and Services Tax, the Land Acquisition Bill, to see if there's progress, because the gains made since September could easily be eroded if you get another washout, as has been the case. The other thing is, in the year preceding an election in India, typically you get a great deal of fiscal slippage, and if the budget assumes a very populist tone and position, that could be a sure signal for ratings agencies to act.
Yeah. And of course, we know that they're projecting, S&P that is, a fiscal deficit of 6% of GDP. They've highlighted this a big concern, the ballooning current account deficit, fiscal deficit. Let's bring Nikhil into the conversation. Nikhil, before we get into India's investment on the African continent, give us your views right now as to what's taking place in the country, the economic reforms that have been put on the table, and which of them really stand out for you? What would you like to look at when you're talking about implementing these reforms?
Well, I think, as Ronak said, India was well overdue for these reforms. In some ways, post the global crisis, they saw a downturn in their economy, which really was inexplicable given the way they were going, and a lot of that had to do with the policies they had in place. So it was critical that they did do these reforms, and to me, the foreign direct investment, albeit they're having significant issues with it in terms of getting the political backing on it, I think that's a very important thing, and they're going to need it. I mean, it's a market that's opening up. It has a huge middle class there of in excess of 400 million people with serious spending power. So they do need to encourage these reforms and encourage the investment, foreign direct investment into the country.
Yeah. And of course, that's what they're trying to do, but it seems that parties can't really find a mutual way forward right now. What are your thoughts on the inflation picture in the country? Because persistently high, of course, that cuts into everyone's spending power, be it businesses, be it consumers. Ronak, what are your thoughts on the outlook for that?
I think that's something that the Indian economy is going to have to get used to. If you look at what's driving the inflation, it's largely structural demand, especially in the rural areas, and then you've got supply imbalances in the logistic, agricultural and industrial chains. And unless you get substantial improvement on that front, you're really not going to see any progress. I think in addition to that, you've had the oil price being high, so a lot of imported inflation coming in, as well as the rupee depreciating quite substantially. So all these factors have added to the inflationary dynamic. and have slowed growth quite substantially.
That Ruby really almost has been disconnected from what's taking place in global markets. Your thoughts right now on the way forward from here as we go into 2013? Do you think that some of these key reforms, especially in light of the foreign direct investment that's so needed in the country, do you think that they'll be able to make progress? Is there the political will from what you saw when you were in India recently?
So I think the fact that you've seen a change in the finance ministry is important. The penny seems to have dropped finally for the Indian government. That said, the walkout of a key coalition partner means that they don't have a parliamentary majority anymore and are reliant on consensus building to pass legislation. So that's the tricky part. I think the political will is there now. Whether they can execute and implement accordingly is going to be a different story. I think a key catalyst for any action by investors and ratings agencies is going to be that budget. If we see substantial slippage and a reversion to a populist tone, then I think that's a clear indication that the Indian government and ruling party hasn't taken the threat as seriously as it should have.
Nikhil, given the fact that we have seen growth in India, being amongst the lowest rates and we've seen in more than a decade, does this mean that Indian investors are looking outside the country for opportunities? Do you see that Africa is a key target right now, a land of opportunity, perhaps from their point of view?
Oh, absolutely. I mean, I think the Indian government, I think it was a year ago or 2 years ago, committed, I think, $5 billion towards trading partnerships with Africa. Africa is undoubtedly a big emerging market, and in an economy like India where they're looking for that growth and they've got to fuel that growth and they don't have the natural resources that are needed, Africa is ideal for it. If we look at the biggest, I think, investment that we've seen is Bharti Airtel coming into 17 countries on the continent, and with it have come several of their outsourcing partners who followed them to these 17 countries in Africa. And we're going to see more of that. I mean, just in East Africa, we're seeing a significant amount of interest in the information technology section. And Kenya, for example, has got a stated aim that by 2030 they want to be a middle income country, and one of the ways they're going to get there is make us an ICT hub for the whole of Africa. So that teaming up with India and their technological background and BPO experience is, I think, going to play a very, very big part going forward.
It certainly does make a lot of sense. This kind of views that you could create Africa's Silicon Valley in Kenya, in East Africa, and of course you've got the expertise coming through from India. What are your thoughts on the investment we've seen so far from Indian investors?
I think speaking to people on the ground, business people in India, the view that they have is that Africa right now resembles India 2 to 3 decades ago. There's substantial opportunity on the continent, and what we see from India is the fact that the investment is largely being led by big corporates, your Bhartis, your Tatas, your Godreges. So there's substantial opportunity because these companies have experience in dealing with consumer markets, with rising middle classes, and customizing their products to the needs of the consumers. In addition to that, India is looking to diversify its energy needs. At the moment, it imports 80% of its oil from the Middle East.
The reason why we have those deficit problems, partly the reason.
Exactly, and given the oil and gas boom that's underway in East Africa at the moment, as well as the fact you've got established players like Nigeria and West Africa as well, this presents a substantial opportunity for India to diversify against the economic slowdown that's currently taking place in the West, and also to forge a strategic alliance that could potentially be a big one for the next couple of decades.
It's questionable, though, how financially successful these ventures have been. Just looking at, Bharti Airtel Africa's business, losing $271 million in 2012. Yes, it was below the $503 million it lost in 2011. And then you've got the SR Group. They lost an estimated 2 billion shillings as a result of some investments in the past financial year. So Nikhil, the question to you is, when you see losses like this for key Indian conglomerates in Africa, why do you think that they've made these losses? Do you think that that's as a result of the huge investments they put in, or are they doing something wrong in the African continent? Is there kind of a one size doesn't fit all kind of philosophy that they need to start looking at?
I think just before I answer that question, Samantha, what Ronak was saying about India viewing Africa as being where they were 20, 30 years ago, yes, absolutely right. Secondly, the big conglomerates are the ones that are leading the drive to come into the continent. However, what I would add to that is that we are seeing a significant number of the mid-tier, small to mid-tier businesses looking to expand into Africa. We've seen it in Ethiopia, we're seeing them come into Kenya, flower farms, textiles, this sort of thing. So there is a big move away from just the big conglomerates doing it. Why have they not been as successful as they might? Well, I think there's certainly a learning curve here. Clearly, as you said yourself, one size doesn't fit all. You can't just pick up your model that you've used in India and assume that it'll work in some other part of the world, and indeed that it'll work in Africa. I mean, I think one just needs to look at the African map, and I think if you laid the US, Canada, South America, China, Russia, India, and parts of Europe on the map, you'd still have space left. So you've got a huge landmass with hugely cultural differences. So what you're doing in Kenya may actually not be right in Nigeria, and certainly may not have been what you were doing in India. So I think there's a learning curve element here, and we're getting over that, and I believe that a lot of these losses will turn themselves round as the model becomes more mature and settles into the environment in which they're in.
So of course, two key elements to take out there is you've got these multinationals, which, learning by doing, I suppose, and I see that, Airtel Africa hasn't been improving those losses, so that's of course a good sign. But the small to medium-sized businesses, is that a good thing for Africa, that you've got these smaller Indian entrepreneurs coming into the continent?
Undoubtedly, but I mean, like any investor, it depends on what they bring to the party and whether the relationship is mutually beneficial. I think there's been a number of positive ventures between the Indian corporates and various African governments. Nikhil mentioned Ethiopia and the likes. Pharmaceutical companies, a wide range of sectors, and what India does have in its favor is that it's managed to develop a vibrant manufacturing and services sector, which Africa can potentially learn a great number of lessons from.
Nikhil, just one last question before we go. If you could just touch on issues around tax incentives for foreigners, particularly Indian investors, in the part of the world that you operate on, and what type of attitude do Indian firms have towards governance issues, particularly at the government level in Africa?
There aren't a significant number of incentives that are specifically geared towards Indian companies. I mean, there are incentives that we have for coming and setting up a manufacturing process or a plant and things like that. But that could be Indian, Chinese, American, British, wherever they're from, South African. So there's nothing specifically targeted towards inbound Indian investment. I guess. The whole question of governance it's a lot more stringent when you look at it coming in from the West, and when you look at the US has got its, I think it's called the Foreign Corrupt Practices Act, and the UK has got the Anti-Bribery Act. I do believe India is also looking at introducing something similar, but clearly investment from the West is a lot more stringent on the governance aspect than it is on the East. And I think we're seeing a shift on the continent actually towards more investment from the East than there is from the West. Now that could also be a factor of the economic situation in Western countries as well. It may not just be the governance part of it.